Now, this panel discussion, we have 3 guests on stage with us today, 1 moderator and 2 guest speakers. And the topic for this panel discussion is the future and obstacles of DeFi. So ladies and gentlemen, first of all, let's welcome our moderator for this panel discussion, Daniel Leon, Celsius Network founding president and CEO. Welcome. All right, now we're gonna welcome Mindao Yang, dForce and Blockpower founder. And lastly, Alyssa Tsai, PANONY CEO. All right, so now they're on stage. It's a 3-person panel discussion. I'm gonna pass it on to a moderator.
So,
thank you.
Yeah, we're running a little bit late for the previous panel, so let's speed up. And I'm Alyssa. I run PANONY, a blockchain consulting firm, and also a business media called PN News. So we're going to talk about DeFi today, and we have 2 amazing representatives. So Mindao is a more decentralized representative as he works for dForce. And Daniel works for Celsius. He's a more centralized representative.
In a way.
Yeah. So just a quick question before I let you guys introduce yourself. So how many of you know what DeFi is? Can you raise your hand if you know what DeFi is? So we know about your, okay. Okay, cool, so we have a lot to share today. And yeah, so some people, DeFi stands for decentralized finance, or some people call it banking, finally upgraded. So yeah, we will have an amazing chat together. So Daniel, can you introduce yourself first?
So I'm Daniel Leon. I'm the COO of Celsius Network. Celsius Network is building a financial institution for the people, by the people. We started a company in 2018. We've got 3 offices all around the world, and we do 2 things, and we do 2 things very, very well. We take deposit of crypto and various stable coins, and we pay people interest, one of the best interests in the space. And the second thing that we do is we also allow people to take loans against crypto, which is being used as a collateral. We currently have $300 million under management. And I think that what makes us unique, speaking of DeFi, and we're going to define that momentarily, is that unlike banks, which are not our friends, we are always putting the community first. We pay 80% of all the revenues that we make back to the community, and we're building an organization that is fully transparent. If you download our app, you'll be able to see at any given time the state of the organization, how much money we have under management, how much money we've paid to date to the community, and I think that's what makes us unique, even if, arguably, we're not that decentralized.
So Mindao, your turn.
Yeah, actually I participated in the previous staking panel. I would like to give a brief intro about myself. Actually, I was in crypto back in 2013. At the time, I was mainly doing Bitcoin arbitrage. Go through BTCE, MTGOX, and all these exchanges go bankrupt already. And then I started to invest in Ethereum. But at the time, I actually was Standard Chartered Bank private equity. So my background is actually from a very, very centralized and regulated industry. And then I joined Honey Capital, which is one of the largest private equity firms in China. I quit the dark side and joined the bright side in 2017.
Well,
I've been fully in crypto. I launched dForce Network by second half of last year. We are actually launching a index stablecoin where we, with basket of constituted stablecoins, including TUSD, Paxos, DUSD, and DAI. So it's fully on-chain, it's fully decentralized, and it's scalable. So we want to build a scalable and fungible stablecoin, and the basket is upgradable. So if there's any better stablecoin in the market, we can put it in the basket and upgrade the index. And we will be launching our money market and lending market as well. So you'll be fully on-chain, you will be able to deposit the stablecoin into the contract and then earn interest rate. It's pretty much like a money market kind of protocol, and it's fully decentralized. Yeah, so it's very happy to have a debate here.
Yeah, so actually before the panel, we met at the backstage and discussed a bit. So I think, can you guys use 3 words to describe what DeFi is and what's the pros and cons for decentralized finance and centralized finance? Start from you for DeFi.
Yeah, I think that several key characteristics for DeFi. One is permissionless. I think that's a very important one because in the traditional finance side, if you want to open a bank account, you want to open a branch, or you want to have a secure license, you got to apply for it, and there is a very, very high barrier. And the reason for that is because there is related to the second feature of DeFi is trust minimized. I didn't say trustless, but it's trust minimized. Because in the traditional finance world, there is an intertwined web of trust of middleman brokers intervening into a transaction. And that's why regulation need to come into play. For example, you want to borrow a loan from a bank, you put a collateral, your house as collateral, you get a loan, your house has to get value, right? So if there is no regulation in a banking side, your house could be inflated, and you get a bigger loan that's bigger than you're supposed to have. But in the decentralized way, you actually put everything on smart contracts. And for example, in our money market protocol, you can put Ether as collateral, is on a smart contract, and then you have a decentralized oracle. You have a price fit into that. So if actually the Ether price fall into a certain level, your collateral will be actually unlocked from the contract and then sell into the market, into the decentralized exchange. So it's fully, there's no human intervention. So that's why I think that permissionless and trust minimized is one of the, I think, two of the most critical features of DeFi.
So actually earlier today, if you were at the debate with Noriel, I think he mentioned that he actually trusts the banks more. So yeah, I would like to hear your opinion and the 3 keywords for DeFi as well.
I can't do it in 3, but I can do it in 2, and those 2 are right on my shirt, and that's Remember 2008. And I think that's the essence. That's where it all begins for me, and not only for me, but for many people all around the world, when the financial crisis, which was the result of a centralized financial system, almost brought the world economy to its knees. And I think that what we're trying to do with DeFi, with this technology, with an underlying technology that will basically solve this centralization, is to build a more fair financial system. And I think that we have to keep in mind that the end goal is not DeFi. The end goal is a more fair financial system for all, which is something we didn't have in 2008 in a consolidated environment which took advantage of people's financial institutions and situation. Our goal is to build, and that's the end goal. DeFi is one way to achieve that goal. Let's not forget, it's quite often, especially in conferences like that, and we're a technology company, we focus too much on the technology rather than on what the technology is supposed to enable us to do. And that is to build a more fair financial system from people all around the world. We do that by leveraging that underlying technology that removes the centralization, that removed the power from the banking system, from the banks, into people, into companies that will make that more fair.
Good. I think in our private discussion as well, I think you mentioned that DeFi is actually just an underlying structure, and you still have a long way to go, and it's for like more users and more entrepreneurs to build on top of it. Can you share more on that with our audience?
Yeah, I think there's a lot of people having misconception of DeFi because they look at Compound, look at Dharma. I mean, there's not many users. But I think that the DeFi protocol is basically serve as a backbone infrastructure for the whole new financial infrastructure. You don't expect it to be like interfacing with the users and users. I mean, all the DeFi protocol that we are building now, including our stablecoin protocol, right? We don't expect average user to interact with the protocol. It could be the wallet, it could be the exchange. You can pledge, a large bulk of Ether as collateral and borrow a loan and then distribute to the users. So I think for the DeFi protocol, especially I think in the next 2 years, we are building the highways and bridges. I mean, this backbone infrastructure is very critical. For example, if actually we build a money market protocol, we can use that to build fixed term loans. We can build a lot of derivatives that you can see in this traditional finance role. I think one benefit about DeFi is that it actually create a global unified capital markets. I can give you an example. For example, in China, if you actually borrow a 30-year mortgage, you're going to pay like 6% interest per annum, right? In the United States, for the same kind of person, same kind of earnings, same kind of affordability ratio, you only need to pay like 3.5% per annum for a 30-year mortgage. It doesn't make any sense because, I mean, from an affordability perspective, the two persons are the same. But in the DeFi world, if actually would put Ether into a contract and borrow, there's no distinguish between whether you're from China, India, United States, or Brazil. It's the same account interacting with each other. So I can envision that DeFi is definitely one of the most viable applications so far in blockchain. And I don't even know why people come up with a DeFi, because when we're in 2013, blockchain is, crypto is all about finance, right? It's nothing, yeah.
It's the main use case.
Yeah, but I think you also raised one question. You mentioned about the countries and regions. So in regard with more financial related products, the government always want to intervene. So what's your opinion on the regulatory compliance stuff?
Yeah, regulation is really a tough question. Because, I mean, when we're talking about regulation in DeFis, I mean, I don't think the regulators or legislators really, they aren't crypto literacy, I think it's negative, right? It's not even zero, it's negative. They don't understand crypto. Because if you actually deploy a contract on Ethereum, it's really no jurisdictions. It's not like a centralized server where you can, you can apply certain kind of law to that. So I think in the traditional finance world, what I call it is like, you actually apply carbon dioxide emission rules to a electric car, right? It doesn't make sense. So I think regulations should be adaptive to the new crypto world. It's not the other way around. And I think the other thing is that, I mean, crypto is the invention that the first time in human history, we technically able to be really censorship resistant. And we're technically able to give no shit about regulation or, I mean, shutting down the internet. I mean, technically that's the first time in history we can do that. So if actually regulation or legislation really wanted to, regulate crypto, they're not going to regulate it out. They gotta be more adaptive to the new world.
Yeah, but that's wishful thinking, right? I mean, to say that, from our perspective, and we are an American company, obviously branches in the UK, and we've got an office in Tel Aviv. But when you deal with paying people interest and taking monetary value from people in the forms of, as I said, cryptocurrencies and digital assets, you're dealing in a world that is fairly regulated. That's a necessary evil. Now, I don't think that governments would allow that to happen. I think that to dream of a world that people from all around the world have got access to the same the same cost of capital, it's nice. It's not going to happen. As long as government has an important role to play, and I believe that government has an important role to play, that's not going to happen as fast as we want it to happen if it happens in the future. Look, for us, when users open an account with us, they have to go through KYC AML, right? Just by the virtue of that, we can no longer run fully decentralized, right? Because that element of it makes it a centralized effort, right? So it's going to be extremely difficult for us to build a business for the long term that will be sustainable, that will continue to serve the community and do what I said is the goal, which is to create a more fair financial system without KYC AML, hence without the role of government.
I really agree with you. I mean, all these two worlds definitely is going to be coexist, right? It's in a parallel universe. But I think the problem is that if actually we are in the crypto industry, right? If we will not go quietly into the night and just, vanish without a fight, right? I mean, the liberal guys, they are making a lot of compromise. They're making a lot of trade-offs. They want to be compatible with the existing regulations. Let them do it. They help the industry pay the legal bills. They pay all the costs to make up to the new regulation that can be adapted to the industry. I think the two worlds definitely is going to be coexist for a very long time. And I think one of the issues is that if we as an industry really just making compromise every step ahead, I think it's really difficult to compete with the traditional banks. I mean, what is it what is the difference between a bank and a centralized finance? I mean, in the name of
A
crypto,
bank
right?
is a centralized finance, right?
Yeah.
I mean, but a centralized finance that works for the banks rather than for the people. One of the CEOs of the main leading banks in the United States was interviewed by, attended a Congress hearing, and one of the Congress people in the United States asked him, well, you know, don't you care, don't you do this and this and this for your customers? And he said, without blinking an eye, he said, I'm not here to serve my customers, I'm here to serve my shareholders. Just think about that sentence for a second, right? And I think that the reason that he can say this is because the financial system that's been created years ago has given that company and that CEO the power to say that with no shame, right? And if we want to change this, we won't change that system by completely ignoring all those rules, right? We're going to change the system by working within certain regulatory framework, right? Otherwise, we won't be able to survive for the long term and bring about the change that we want to bring to the world.
Yeah, I think the tricky thing about regulation in the crypto space is that if you actually build a protocol, you really don't have any department that you can get, you can consult with the regulation, right? It's unlike a centralized internet kind of products where you register in a certain service or location where you can apply for a license, whatever you do. I mean, for a smart contract on Ethereum, you're gonna ask SEC for regulation, or it's just impossible. I mean,
we're not going to ask the SEC. The SEC or FinCEN or any one of those regulatory bodies will not allow us to function. It's not a matter of asking. It's a matter of, for us, as an American company, as American owners, if we want to continue to run this company, and if we want to continue to serve our community, we will have to do that by obeying certain rules, KYC being one of them.
yeah, I think that definitely we'll be living in a hybrid world. That's my point of view.
You should share more about China. So I actually know a lot of more decentralized or centralized finance product in China, but it got a little bit sensitive for like asset-backed token or token-related products in China. It's a little bit sensitive for the mainstream and for the regulators. Are you facing with any difficulties for that?
Well, actually, for all the DeFi's, even the blockchain exchanges that we have today are not registered in China anyway. They operate outside of the country. You know, from a legal perspective, it's not really operating in China anyway. For all the public blockchains here today, even if they have very strong China connection. So I don't think that, you know, the regulation on the ground is really able to do that, because that's why, I mean, the beauty of DeFi is that we really don't touch fiat, right? In our stablecoin protocol, we don't touch fiat. There's no fiat interface anywhere. It's just purely protocol. It's just like a communication protocol. So I mean, if actually you're running a centralized kind of platform in China, it's highly regulated. You got to get license, maybe apply for 5-10 years to get all sort of licenses. It's extremely difficult. But still, I mean, all those innovations in the space is, you know, we definitely is able to discover a lot of opportunity around the DeFi ecosystem. Yeah.
Yes, I'm also wondering, so for a centralized one and a decentralized one, will the user acquisition approach be different? Can you guys share a little bit like where you start from the user acquisition, like regional wise or age wise, like their demographic, and how you, what's your strategy in getting the user or making it with mass adoption?
Yeah, so look, when we started a company, we obviously started in the United States, started in English, and focused our effort on targeting users with our value proposition. And we focus on one word and one word only, and that's community, right? It's all about building a community. It's always about, it's mainly about doing well for the community and seeing that community going out there and growing and telling people about the value that we've been doing. We do very little marketing. We've got a few tens of thousands of customers all around the world. 50% of our customers are based in the United States, the rest in Europe, and 20-some% in Asia. And what we're seeing is almost unintentionally, it's not that we ran a Facebook campaign, Facebook is blocked, but if we had a Facebook campaign in Korea versus you know, the United States, we basically launched the service and we saw people who participated initially in our ICO, coming back, downloading the app, starting earning interest, and then going out there and sharing the benefit of Celsius with the community. And almost 10 months after we launched this thing with almost 37,000 customers all around the world, it's very diverse. We have in the office a map of the globe, and we're seeing people from all around the world kind of joining us without really us taking a proactive measure to recruit these customers. It's all about growing that community and doing what's best to that community every single day.
I think for DeFi, one of the major advantages for DeFi protocols to really penetrate the markets or growth is that basically we don't have any maintenance costs, unlike the traditional finance or traditional centralized finance operations. For example, like MakerDAO protocol, they have a total outstanding loan about $80 million US. It's automatic protocol deploy on smart contract. So there's no maintenance. You can imagine a bank that run like $80 million US portfolio, loan portfolio. It would be hugely costly. I'm not talking about license costs. I mean, just about the manpower to maintain the operation is huge. So, and one of the beauty of DeFi protocol is that just take USDT as an example, right? USDT, even though it's a very crappy stablecoin, but their organic growth is just like crazy. The total outstanding USDT by earlier this year is about it's maybe below 2 billion, right? Now it's go like $4 billion US already. There's no promotion about it. It's just organic growth. All the traders you talk to in different trading desks, they use USDT, and less people now use Bitcoin. That's why I think that in the crypto world, stablecoin is going to be the dominant kind of trading pair. No matter in the crypto to crypto trading or in the OTC markets, it's going to be the dominant one. So I think all those DeFi protocols, including Compound and MakerDAO, one of the advantages also is that because they're permissionless, so there is a lot of overlay of protocols. You can build different kind of DeFi product that connected to MakerDAO or Compound without any permission. So their growth is basically they can grow without any friction. So I think that's why we really have very passionate about the industry. And you are going to see in the next 2 or 3 years, all those traditional finance products will be mirrored on-chain. And we're talking about stablecoin. It basically tokenize US dollar. And the M0 of US dollar is $3 trillion US. M1 is, I think, is about 4 trillion. M2 is about 14 trillion. So altogether, it's like 20 trillion US asset tokenized via stablecoin. That will be a huge, definitely game changer in the crypto space.
You know that Libra is going to actually increase the money supply, so we have to take that into account.
And also, by the way, please don't use USDT, use other stablecoins.
Exactly.
Yeah. So, to wrap up, what's your opinion on DeFi or like generally financial products in blockchain area? Like, what do you see in what's the thing that we should really put focus on in the next quarter and the next few years, if we look at it from the short term and the long run?
Yeah, I think stablecoin is going to be the major war in the crypto space over the next 1 to 2 years. Libra coming out is very good. It's definitely a validation of what really being the payment medium of payment. I don't think Bitcoin or the other native payment token is going to survive in the markets. It just
don't think Bitcoin is surviving the market?
I think stablecoin is going to be the medium of exchange, the unit of account. So all the native tokens that use payment as the major usage, they're going to be have a very, very tough time. And
what about the tokens issued by exchanges, like?
It's different. I mean, exchange token is more like security token, right? They have different kind of features, so they have different utility. But I think payment token, they have a very tough time because I mean you cannot expect people to really sync up all the different price if actually your payment is dominating in a native token, right? It's just impossible. And in the DeFi space, I think the first wave of application will be stablecoin. We're going to see 2 or 3 or 4 dominant stablecoin over the next 5 years. with a market cap of over 10 billion US dollar. That's definitely visible. And Libra is going to be a monster if they actually, could really come into play. It could be like definitely like 100 billion US dollar outstanding kind of animal. So, and after that, I think there was a lot of lending product protocols. That's most promising one because, I mean, if you actually look at traditional finance world, the lending and credit side, they account for like 100 trillion US dollar outstanding assets. And I also very passionate about some of the real world real estate assets that can be tokenized or really can move onto the blockchain. That will be creating very interesting lending markets because all the decentralized lending market now is based on crypto, right? BTC or ETH. So the lending product is going to be very interesting as well.
So how far are we from like a real tokenized world, like for assets?
I think stablecoin is already disrupting the whole industry, including that we can create a totally different payment rail, in parallel with the traditional finance world. I think that will, it would take about 2 or 3 years for that to disrupt the markets. But for the other product, I think maybe we would expect like in 3 years, a lot of these protocols will be matured.
Look, I think that when we think about the future, we live in such volatile times, especially in this industry, that to pretend to know where we're going to be a year from now, a month from now, it's an exercise in fruition. And I think that U.S. President Abraham Lincoln used to say that the best way to predict the future is to create it. And when we think about what we're trying to create here as an industry, especially specifically DeFi as the topic of this conversation, I think that we should continue to focus on what it is that we're trying to do here. And that is, once again, to build a more fair and just financial system. And to do that with DeFi as an underlying technology, we will have to continue to remember that it's a balancing act. We cannot continue just to focus too much on that technology. We'll have to involve the role of government. We'll have to focus on KYC, AML. That is the only way that we will be able to bring that technology as a means to an end of improving that financial system, so we're not going to have another 2008.
I see. So just one more question for you. Do you think like for centralized products, there is does it comes with better services? Because for many people, they might be feeling that for decentralized products, does that mean there is no services at all, or how should I approach if something bad happens and so forth?
Look, the majority of people, they don't understand decentralized versus centralized, right? I mean, my parents do not understand the difference between the two. And our goal is to get the next 100 million people into crypto. We cannot continue to go from one conference to the other and to continue to talk among ourselves. That will not bring about the change, right? We want to make a difference with that technology. So let's focus less on the decentralization versus centralization. It's important. That's the essence of this conference. That's why we're here. And once again, and I know it sounds like a broken record, let's focus on what people understand. My biggest issue with some of these underlying technologies is that the use case, that the user interface is not there. It's really hard to use, right? Even buying a stable coin, it's not easy. We can do this. 100% of people attending this conference can do this. But if we want to make a difference, we need to make it really easy for people to buy stablecoin, to deploy it in an exchange, to earn interest, to borrow against it, and and I think that's what's amazing about what Libra, in a way, Facebook is doing. I think that's a good thing. It brings the validation. 2 billion people today know what crypto is, and that did not happen prior to Libra coming.
Yeah, actually, in addition to your point, I mean, that's exactly my point, is that all the DeFi protocols now, they are not user interface protocols, right? Because we're doing, we're actually trading and using Compound and Dharma every day. We take out, I mean, it's quite interesting because, I mean, Compound version 1, they have upgrade, right? So we refinance a loan in like 10 minutes. Yep. Like 10 minutes. That's very fascinating. We refinance $500,000 US loan on chain without any intervention of middleman.
How many people can do that refinancing in 10 minutes?
Well, that's exactly what I'm saying. We are a trading, we have trading businesses, and it's not going to be a user interface. It's going to be a traders businesses, they will use that as their backbone for settlement, for getting loans. It's definitely fascinating. And you
No
don't, you have a high expectancy that you will get the loan because no one can stop you. It's a smart contract. I put in collateral, you get it. So that's my personal experience.
So based on like two of your like answers, does it mean like so for like general traders or people outside of the or mysterious blockchain industry, like they might have no idea about the product they're using is actually centralized or decentralized. It's more about the product itself.
Yeah, I mean, you expect, if
service.
actually you're a trading desk, right? If actually using a centralized one, I have to take into account of your counterparty risk.
Yes.
What if you run away? If I put Ether on the contract, I don't need to care about that. I mean, that already is a
Is
huge
that
advantage.
scalable though?
Right.
That's the issue.
Cool. Yeah, I think we have a great session here, and if you guys have any questions for like each of us, we'll be off the stage, and you guys can come to talk to us. We have limited time, but I enjoy talking to you guys. And
Thank you very much.
yeah, thank you.
Thank you,
very
thank
much.
you.
All right, thank you, Alyssa. Thank you so much for this panel discussion.